The world economy is in a difficult place right now. 7 years after the end of the financial crisis, growth remains very weak, especially in the developed world. This is true of the United States, Europe, and Japan. For somewhat different reasons, but in large part the damage that was done during the financial crisis of '08 and '09 really has not been fully repaired, and so aggregate demand in the major developed economies is growing at a very weak pace. The main source of weakness in the United States in the last 8 years has been the American consumer. The growth rate for U.S. consumer demand for 8 years has averaged 1.5% per year. And in the 12 years before the crisis, the number was 3.6. Consumers suffered major damage to their balance sheets during the crisis. Too much leverage, too much dependence on the property markets as a collateral for borrowing, and the property market turned out to have been in a bubble. The bubble burst, and the collateral for all the debt has been sharply reduced. So consumers are more focused on paying off debt than they are on spending. Well, the savings rate in the United States is now, personal savings rate, about 5%.
Reached 5% right now.
Yeah, but the average in the final 30 years of the 20th century was about 9.
Okay.
So savings is still well below average. You're right, the Chinese household savings rate is close to 30%. It's much higher. But, and that reflects unique issues in China. The lack of a social safety net in particular. But, you know, the U.S. and China are different, but you know, their challenges are really remarkably related. The U.S. consumer needs to save more and spend less. Chinese consumer needs to save less and spend more.
Yeah, that's good. Yeah.
Japan is appears to be back in recession right now.
Back in recession.
Yeah, and the so-called Abenomics program doesn't seem to have worked all that well.
Japanese disease.
Yeah, they still have the disease.
Okay.
And you know, Japan has a shrinking population and a weak productivity, and it needs to address both the demographic issues as well as the factors that will lead to an improvement in productivity. A lot of structural change needs to take place in Japan. And the Abenomics program had 3 major arrows of focus: the monetary, the fiscal, and the structural. And the bulk of the effort has been on the monetary front without making much progress on the structural. And that's very difficult for Japan.
You mean that not working as we expected?
Advertised, no. And you know, the economy's back in recession again. And the growth rate, you know, Abenomics has been in place for 3 years. The Japanese economy over that 3-year period has grown 0.7%. And over the preceding 21 years, the growth rate was 0.8%. So there's no real difference here.
Okay.
Europe is still dealing with problems in many of the smaller peripheral economies like Portugal, Italy, Ireland, Greece, and Spain. There's still a banking problem. There's still an incomplete sort of fiscal coordination or union. The currency is weakened, but that hasn't boosted European GDP growth, which is for the last 8 years basically not grown at all. The Chinese economy has slowed, and the slowing, in my opinion, reflects two sets of forces. One, the weakness in the world economy, which has a big impact on Chinese exports, and two, the policies on the part of the government to make structural adjustments, moving from manufacturing to services, from exports and investment to consumption. This is a structural change that will definitely lead to slower growth. There's a lot of concern that China's growth is going to be even slower than appears to be the case right now. I don't think that's the case, but I certainly worry about that possibility. Europe and Japan are the least successful. China, I think, is definitely making progress on the strategic initiatives to change the growth to more consumer-led growth.
Okay.
But there's more progress that needs to be made in China.
Okay.
The U.S., I worry that we haven't made as much progress as we could or we should, and we've relied too much on monetary stimulus.
Too much.
To support our markets and our economy. And that's not healthy. The U.S. Productivity growth is now slowing significantly. And if we don't begin to address that, then our economic performance will continue to be very weak. China continues to contribute much more to global growth than anyone else. Over the last 10 years, China has contributed more than twice as much to global GDP growth than all of the developed economies combined. That now has narrowed, and China is contributing less to global growth than it had, because the GDP growth has slowed from 10 to 6.5 to 7.
Yes, right.
But even if the economy holds in the 6.5 to 7% zone, or even goes a little lower, say 6%, possibly,
Okay.
China will still be contributing more to world GDP growth than all of the developed economies. Unless, of course, there's a sharp bounce back in the US or Europe or whatever.